Welcome to the Hong Kong Green Finance Association's Biodiversity Training Series, Module 2. My name is Jenny Lee, the Deputy Secretary General of HKGFA. This is the second of a 5-module biodiversity series co-organized by the HKGFA Banking Net Zero Commitments and HKGFA's TNFD Biodiversity Workstream. In Module 1, we introduce the concepts of nature, biodiversity, the latest global and regional market developments in disclosure and standards, and practical considerations for integration into property development and sustainable finance product structuring. Today, in Module 2, I'm delighted to extend a warm welcome to Mervyn Tang, Head of Sustainability, APAC Schroders, Ms. Ellen Lam, Head of Sustainability, Rabobank Asia, and Ms. Vivien Tu, Partner and Head of Asset Management and ESG at Dentons, who will share their insights on how to assess biodiversity-related challenges and opportunities in investment and lending frameworks, covering considerations for assessing materiality, the risk, opportunities, and impact. A few words on housekeeping before we start. We will leave time for Q&A after the panel discussion. Please write your questions in the Q&A box. This webinar is eligible for CPT hours subject to your employer approval. To claim your CPT certificate, please complete the survey at the end of this webinar. So without much further ado, I will now pass the floor to Mervyn. Thank you.
Thank you. Very happy to be here. Let me just share my screen. Great. So, hi everyone. I'm Mervyn Tang. I head sustainability in APAC for Schroders. For those who don't know us, we're a UK headquartered asset manager, but we have been in Hong Kong for 50 years, and sustainability is absolutely one of our focal areas. And so, when we're talking about biodiversity, I think that in the first part of this series, we talked about the importance of it, how important nature is to our economies, how our ecosystem is key to the functioning of many of our industries, the reliance on semiconductors, on water, the need for paper and pulp and food products on things like palm oil and forests. There's a lot of things that we know nature helps us to do when it comes to providing for our economy. The hard bit for financial institutions is, okay, well, we know it's important, but what do we do with that knowledge? Like, how do we actually measure biodiversity? How do we think about doing things in a systematic way to incorporate into either our investment decisions and lending decisions? So in this training series, I'm going to go through how we at Schroders look at biodiversity and nature. And then we'll go into a panel discussion with Vivien and Ellen to learn about, I think, two sides of things. I think Vivien is, in a law firm, is exposed to the conversations with many, many asset managers who have to deal with biodiversity and nature issues. And Ellen at Rabobank, as a financial institution, as a bank, would have to understand how that works in terms of incorporating into lending and the bank's broader sustainability framework. So from kind of starting with the presentation, I'll go through about what it means from including biodiversity into investment decisions. One thing I would just state is for an asset manager, the way that we need to look at things can be somewhat different to a bank, especially if we're focused on public listed equities. So as an asset manager, we may be managing portfolios with an investment universe of, let's say, the whole of global equities. And we're talking about investment universe of more than 10,000 stocks, if you include things like small caps and just broadly across the globe. And so it's not quite the same as, let's say, a bank who can directly get information from their lenders, go into detail with each lender. We need to have a system to be able to analyze very broadly. And so that can change the way we incorporate biodiversity into our analysis. So I think a good way to start off the conversation is, how do asset managers look at sustainability issues in the first place? Then we can put some context into how we think about biodiversity. So ESG integration is about integrating ESG into the investment process. So this is about incorporating ESG into our research, into our valuation models, the tools that we use. It's not just one thing. ESG integration is not about taking a set of ESG ratings and then tilting being overweight on companies that score better, and then underweighting companies that score worse. Companies that score worse. It is a broad process. It's understanding the macro implications of certain themes. So if it's something like climate change, it would be what happens if carbon prices increase on the cash flows of the companies that we are looking at. We may be wanting to understand when it comes to certain ESG risks, let's say the risks in the supply chain, where are companies most exposed, and is that potentially priced in? This could be particularly relevant for things like controversies. So we know of big incidents when it comes to, let's say, fraud, oil spills, and other things. We need to understand how that we should include that in our investment models. Then there's things like training, just internal training when it comes to helping our investors, our salespeople, many others to understand how ESG is integrated, and then externally helping clients understand why it's important to do so. So it's really a broad set of things when we're talking about how ESG is integrated into an asset manager. And one of the key things that we need for what we do is the right set of tools to look at ESG. So is it just one set of tools and ratings? Realistically not, because as an asset manager, we have to achieve a lot of different things. So we have to assess how vulnerable a company is to sustainability risks, and as well as how likely they're going to gain from opportunities. That's one aspect of ESG, but we may want to understand how a company's actions affect a broad set of stakeholders. Or we might want to understand how aligned they are to specific SDGs, or maybe even to understand if specifically how they're exposed to climate risks under different scenarios. So the transition risk of how a company exposed to a shift to a low carbon economy, or the opportunities they potentially have, let's say, in that transition when it comes to the increase in demand for green technology. Then you've got physical risk side when it comes to the potential for the increase in nature and severity, in the frequency and severity of natural disasters. There's a lot of things you need to look at in ESG, and in the same way you can look at biodiversity in a similar lens, right? You can look at how biodiversity affects different stakeholders of a company. You can look at how different biodiversity solutions may receive greater demand in a world which has stronger policies on biodiversity, be it ban on fertilizers, be it a kind of more careful arrangement when it comes to the usage of water. So we need to fit biodiversity, not just as a standalone analysis, but into kind of our broader context of sustainability. That's kind of how we frame ESG. And so now, as we get to the more gritty part, how do we actually fit biodiversity in? One thing is to think about, I think, as a framework, like how should we consider different aspects of biodiversity? Well, one thing is, okay, what are the risks a company faces from their exposure to biodiversity? So if you are a semiconductor company, you'll be using up a lot of water to clean your fab and as part of your manufacturing process. And so you are dependent on that water source. So depending on how the scarcity of water for that particular water source you're attached to, that's going to be kind of your gross risk overall. But just because you have a risk exposure doesn't mean that as a company you can't do anything to mitigate that risk, right? You can have policies in place, you can have arrangements, you can have alternative sources of water, you can have policies to manage the overall amount of water efficiency of your manufacturing process. You can have a degree of mitigation for your particular risk exposure that you look at. And so I think when you think about risk exposure and risk mitigation, like mitigation helps to look at a kind of a net risk to the company. But it's not just risks that you have to look at. You have to look at opportunities. And so if we're thinking about, let's say, the availability of fresh water, companies that are providing solutions to provide more fresh water, so water sanitation being an example, those sort of solution providers could see a benefit in a world which is putting more value into the nature resources. So if there's kind of more stringent policy and water pricing being applied to different parts of the world, then there might be benefits for those benefits for those solution providers. one of the things that I think that TNFD very much talks about is the importance of geographical and locational aspects when it comes to biodiversity. And so if we think about, let's say, the water scarcity example, there'll be different pools of water in the world. And let's say, for example, certain pools of water in China are face a substantial potential for scarcity of water because of the nature of the system that they're operating in. Whereas if we, let's say, take certain pools of water in Canada, that freshwater resource can be very abundant. And so there's very much a locational aspect to the analysis of biodiversity that makes it a little bit different to, let's say, looking at purely transition risks and climate change, maybe more parallels to physical risk and climate change. Now, because of this geographical exposure, I think one of the key resources we use and is recommended in and discussed in the TNFD recommendation is to look at ENCORE, which tries to think about different systems of nature loss and then trying to understand how different sectors are more or less exposed. Because I think if you think about, let's say, something like consumer staples, a lot of those consumer staples might be exposed to things like palm oil, and so they're particularly vulnerable to land use change. If we're talking about, let's say, the energy sector, there's going to be more greenhouse gas emissions, and then the biodiversity impacts on and nature impacts of global warming will be more material to that particular sector. And so we use ENCORE as a tool, and I think many have started to look at ENCORE as a tool to try to understand which drivers of nature loss are more material for particular sectors, and then looking at the risk factors for individual companies. So once you identify what's material issues, you can think about what that exposure means for the company, and then what type of mitigating policies might be relevant for companies in that particular sector. I very much encourage people to take a look at ENCORE. It is quite a useful tool to have a kind of a broader understanding of materiality assessments in nature. Another thing that we, in terms of one of the tools we use, I would mention that kind of our flagship tool on sustainability is something called SustainX, which tries to express the positive and negative externalities that a company faces in dollar terms. And so we net that out. So things like innovation of a company contributing to the technological development globally is a positive externality, where something like carbon emissions is a negative externality because it leads to physical risks from global warming, as well as things like pollution. So once you aggregate these positive, negative externalities, it gives us an understanding of the impact that company has environmentally and socially on the world. Even before TNFD and biodiversity became kind of a popular tool and discussion, became a popular topic of conversation, we had already included many metrics you might look at on biodiversity in our analysis. We just didn't group it as a biodiversity analysis completely. So within this tool, we looked at things like the runoff from fertilizers, impact of nuclear waste, pesticides usage, the impact of overfishing, nitrous oxide and sulfur oxide emissions. All of these were included in our models. And I think that's actually one important lesson to think about when you're thinking about incorporating biodiversity analysis, is that actually a lot of the issues we're thinking about, be it deforestation, be it water scarcity, may already be included in parts of your model. It's just bringing that together to understand a broader biodiversity net benefit, which is a net benefits or net costs, and then using that as an overall analysis, because the land use, ecosystem damage, all that stuff can connect some of these risks together, and some of the policies aimed at targeting these issues can be interlinked. So that's part of the reason why we may want to look at some of these issues collectively rather than as individual aspects. Just to give you an idea in terms of looking at the geographical assessments and looking at how to think about adjusting things. So what you'll find is there is a lot of geospatial data out there. and it's not necessarily disclosed by companies. What you tend to find is companies may disclose where their assets are located. It could be where their factories are located. For real estate, it could be where their properties are. The exact thing that you look at will be dependent on the industry in terms of thinking about the type of risks. Because I think if you're looking at, let's say, let's say bringing the semiconductor example, because the water is being used in the manufacturing plants, you would be looking at the water sources that where the factories are most tied to. Whereas if you are looking at, let's say, a food product company and you're thinking about palm oil, you may be looking at the geographical spread of the supply chain and the companies involved, because that's where the risks are. But I think the key is that I think what we're able to do with geospatial analysis is to map the location of assets, locations of factories, locations of operations to areas of risk. So we with different types of service providers, they'll give you understanding of which areas are going to have more biodiversity loss, which areas are going to potentially have greater areas of forest loss, and you can overlay that with the geographical data that you have of companies. It's by no means an easy feat when it comes to doing this. It's the granularity of geography is not easy. Sometimes the availability of geographical data for companies is not there, particularly, let's say, we start to move towards emerging market, emerging Asia. It's not, you don't always get the data provision. But it's very important to look at locational data when you're thinking about biodiversity. And I think for asset managers who have to look at this broad portfolio, this kind of geospatial analysis and mapping operations is a very good way of doing so. Just to give you a bit of in terms of once you look at that, you can think about the risk exposure, you can think about the risk management aspects. So how do we think about this? So in the way that TNFD and TCFD outline the importance of strategy, governance, risk management, metrics and targets, we can look at different things relating to that, right? So how is the board responsible for decisions around nature and let's say deforestation, water scarcity? What kind of disclosure does the company have? This analysis can be quite qualitative in the sense of it's not always just metrics that we can look at. So what we do need to do is to find a way of aggregating and collecting this data. And through this, so one thing that we have at Schroders is a framework for stakeholder analysis. So putting this together in a way that looks at, allows a structured way for our analysts to input some of this information. So how this works is we identify key trends in each sector, and then we put together a set of questions and metrics that might help to answer that question. And then the analysts have the room to effectively adjust and assess the potential risks of to answer some of these questions. Again, there'll be some subjective element in this exercise. There's of course the analyst's own views on the implications for the company. But I think that's really important because you need the analyst's expertise when it comes to the financial aspect to mix it in with the understanding of what the biodiversity risks and implications are. And I think that's a key part when you're thinking about how you create the systems in your financial institution. Last but not least, solutions is just as important at risk, because it's not only companies not only a risk from biodiversity, they can benefit, as I mentioned earlier. And so what we have is a tool called Themex, which basically takes different external data sources and tries to understand how their different revenue segments are exposed to different elements. And so we take kind of thousands of data points. We have effectively a sector-based taxonomy, and then we build that into sub-themes. So it could be sustainable food, it could be health and wellness, terrestrial ecosystems. There's a lot of potential things you can look at when it comes to biodiversity to just see, which companies have goods and services that might benefit in a world where there's more focus on mitigating biodiversity risks, or where there's stronger biodiversity policies in place. And so kind of give you a bit more of examples of what that looks like. Unfortunately, I was told by compliance I can't use specific company names, so I had to blank this out. But the way that we look at this analysis would be, let's say, what type of So this is specific SDG life on land. What kind of things could benefit life on land? Agriculture innovation, soil remediation, marine protein, animal protein, like protein sources that might be less carbon intensive. It could be sanitization when it comes to both waste and water. Like there's a lot of things that we can look at in terms of different revenue segments. And FEMEX, as a tool that we built in-house, allows us to have a much more granular way of assessing this. Of course, there are third-party data providers who will also look at these sort of things in the similar, but I think from a financial institution point of view, it's just important to think about ways of assessing these opportunities. I tried to keep this. I've already kind of quite a bit of time now, but of course, it's not just about investing. You have to also engage. Engagement is also a tool that asset managers have. We not only can influence companies through in the selection our investment decisions, we can also talk to them and also exercise our power as shareholders. And so natural capital and biodiversity is absolutely one of the kind of key areas that we would want to engage companies on. And just to give you an example of the types of engagement that we've been doing on this, so the kind of the most common types of engagement has been on sustainable food and water, deforestation, nature-related risk and management, so that's very much TNFD, and then circular economy, pollution and waste. And so happy to go into this in more detail in future, but I think one of the key aspects is having a key requests and objectives that you have when you're engaging the company, and also support them in knowledge sharing, because what we find is that a lot of companies are struggling to deal with climate. So trying to build biodiversity and looking at what to do there is an even bigger struggle. And so it's something that we have to work with companies to make progress, not necessarily just force them to take action. Finally, and last but not least, so when it comes to investing in nature, it's not just public markets. There's increasingly evolving space when it comes to direct investment in nature capital. So with the development of carbon offsets markets, we see people investing in forestry, trying to understand the biodiversity co-benefits that preserving or conserving forests might have. You're seeing the same kind of approach being done on land and marine life. There's a lot of things that are developing in the system, both in terms of private financing as well as blended finance, which I think some of our speakers will talk about a bit later on. But that just gives you hopefully a brief, an overview of biodiversity as an investor. Now, jumping into the panel discussion, what we're going to do now, and luckily to have Ellen and Vivien with us. As I mentioned, Vivien has a great view of how biodiversity is assessed across asset managers and the challenges they're dealing with. And then Ellen as someone who's looking after the sustainability initiatives at a bank. And so maybe just starting off with you, Vivien, I talked about how Schroders is looking at biodiversity. It would be great to hear kind of your conversations with asset managers on biodiversity, as well as a bit of an introduction of what Dentons does in the area.
Thank you very much, Mervyn. So if I can start with an introduction of my role and Dentons. So Dentons, for those who do not know, we're actually the largest international law firm. We're actually in more than 80 jurisdictions and 200 over offices. And I think there is a real advantage there when we advise on ESG, especially biodiversity topics. And I highlight that because a lot of what we need to consider are actually local requirements, local context. And my role at Dentons, actually, I'm part of the ESG leadership group. I lead sustainable finance, and I kind of along with other partners that are in the leadership group. Some of them are environmental and part of the environment and natural resource practice, and some of them are supply chain partners. So we actually continually look at how ESG is sort of issues are emerging, and specifically for financial institutions and in sustainable finance, how different ESG issues are sort of shaping investment and lending practices. So some of the specific areas of work that I kind of do with asset managers would be sort of understanding, as many of us have been working and dealing with requirements around climate risks, disclosures, and management. So I think now increasingly we have to think about biodiversity issues as well. And it could be looking at how the understanding of the related issues is shaping investment strategy and appropriate disclosures, but also thinking about the appropriate due diligence framework that needs to be put in place for investing, whether in the public markets or private markets, as Mervyn mentioned, because it really depends on the strategy and the asset type and class and location in terms of materiality and relevance, and sort of working that out. And also think about reporting and disclosure requirements more broadly as well. And we do a lot of horizon scanning. And so this cuts across a lot of biodiversity issues because it's, as Mervyn shared, multi-dimensional in nature and highly complex. There's actually a lot of different terminologies, so maybe we can go into them in the next section. But for now, I think, I hope that's a good intro to start.
Absolutely. Thank you, Vivien. We've talked a lot about asset managers, and as I mentioned, banks can be very different. So Ellen, it'll be really good to, from you, understand how banks look at biodiversity, and then a little bit more about what you do at Rabobank as well.
Thanks, Mervyn, and very happy to be here with you, and also Vivien joining this really interesting and meaningful discussion with the audience. We have quite a lot of audiences here. So just by way of introduction, so I am the head of sustainability for Rabobank in Asia. We are focusing on the food and agriculture sector all the way across from the upstream all the way to the downstream in Asia, and we have locations in mainland China, Hong Kong, and also Singapore, looking over the Southeast Asia portfolio. So when back to Mervyn's questions about or my view on, how do we look at, or how do we incorporate biodiversity and what does it mean for banks? I think we look at it more also from a risk and opportunity perspective. On the risk side, I think it's on how we are dependent on nature. How does the state of nature affect our bank and affect our bank's clients, especially when we're in the food and agri sector? Like what Mervyn mentioned earlier in his presentation, if you think of the consumer, the consumer food products, a lot of them using palm oil, or it would be a lot of the food processing or dairy products consuming a lot of land use, etc. How are these ecosystem services due to different sectors in the bank's loan portfolio, and how are we dependent on? And on the other side is how does the bank and our clients affect on the impacts on the nature? It could be, it does not necessarily need to be negative. Sometimes it can be, everyone thinks of biodiversity and we're thinking of, what are we doing impacting the nature? And sometimes it could mean that, negatively, but actually, if we're doing it right, there are also a lot of opportunities and positive side of things that we are actually doing, and we also see our clients doing. And I think globally, a lot of responsible companies are also working on to have an impact positively on nature whilst they are also producing their products and services. So I will say biodiversity is definitely more complex than climate as a topic. Its overall objective is, definitely more multiple and context dependent. Like what we mentioned earlier, you can have various metrics. We're talking about species richness, ecosystem quality, species abundances. Whilst, when we talk about climate, we're talking about 1.5 degrees Celsius, full stop. And it's hard to achieve on that already. So we move to biodiversity, or even on a broader term, I think we mentioned a few times in earlier already, is nature. So it's definitely something that we're all learning together, even as a bank, as a food and agriculture bank, or from asset managers or even lawyers as well. I think we're all here together to learn this journey together. And of course, it comes with opportunities too in terms of financing. I think we've also mentioned about the natural capital financing, where it can be applied towards conservation with the intention to deliver a net positive biodiversity impact, whilst we also generate great returns. So a few examples that I can give later on could be coming with regenerative agriculture, or even the carbon bank as well. And I will share that a little bit later when we come to that. Thanks, Mervyn.
That's great. Thanks, Ellen. I just want to remind the audience that we do have a Q&A box that you can submit your question. I see already one that is being asked on risk management. That is a topic that we will absolutely get to, because it is a very important one later on in this session. But yes, please feel free to for the audience to continue to submit question as we go through this webinar, and I'll try to weave it in where we can. But maybe just thinking thinking about the operational impact, like what does all this focus on biodiversity mean for a person working in a financial institution's day job? And so I think, Vivien, for you, from like there's so many regulations and initiatives coming on biodiversity, be it TNFD, be it other things. What are kind of some of the legal and like considerations that are affecting financial institutions? Like how is it affecting what they do?
Yeah, very key to consider that as a starting point. Thanks, Mervyn. I think quite often what I would do is to suggest, breaking it down and thinking about, I think, although, Ellen's covered the risks and the opportunities dimension of biodiversity and nature, I think for me and as a law firm, we would use as a starting point, is this going to be a regulatory and compliance matter, which is kind of traditionally been around? So I will highlight that as a starting point. But at the same time, understand that, as you say, it's like you see a lot of initiatives coming out and it seems to be accelerated. And for those who have been navigating sort of dealing with climate change requirements, the TCFD, and also the upcoming, I think in Hong Kong, the ISSB requirements on enhanced climate risk requirements expected on listed companies. So, actually biodiversity issues is coming kind of following right after. We can all see that happening. But how is it affecting? And again, back to baseline regulatory compliance, but beyond that is actually understanding how the market is shifting as a range of issues to think about, because there are evolving kind of disclosure and regular reporting requirements around biodiversity, nature-related issues. We have actually, seen the TCFD kind of being adopted, and if you think about Paris Agreement 2015 being the clear line of sand, and we've had almost like 9 years of developments around climate. I think we all agree that for biodiversity, we're going to take a lot less time to kind of get to the same pace. And so increasingly we'll see that you have to consider climate along with biodiversity. But I say that because it is a fast evolving landscape, and therefore there are certain risks, because when you think about regulatory and compliance matter, it will be like the traditional environmental impact assessment and the like when you make investment or when you do a finance. But if you think about risks, and here, I will already highlight, how we think about TCFD, TNFD, is thinking about risk also in terms of where there is a policy risk. So this is where, understanding the same way we understand how Paris Agreement has been shaping regulatory policy, governmental policy, it's going to be something that we need to navigate on, the policy landscape around biodiversity, especially following the global biodiversity framework of the Kunming-Montreal Agreement at the end of 2022. So this is actually a risk matter, but it's different from a compliance matter. And then the other is thinking about opportunity, right? Like Ellen mentioned. So there would be some of the opportunity, and so and then aligning this with the organizational sort of level of ambition and again materiality relevance, and see how that fit in with the reporting requirements. So it is a challenging landscape, because it could mean different things to different people, right? I mean, if you talk about biodiversity, there are like it could be negative in terms of, is this a question of deforestation? Is this a waste or pollution? I want to highlight the multidimensional nature of this. Just using an example, if you look at Hong Kong ESG reporting guide, right? Biodiversity isn't a specific topic, but is relevant across the 4 environmental aspects, just to make it close to home. Everybody maybe can use that as a starting point. So you have the aspects on emissions, which covers land, water, and air emissions. And then there's also aspects too on resource use. And there's also kind of about the organization's impact on environmental and natural resources. And then, there's aspect 4, which is on climate change. And we know as well that climate change is very closely related to biodiversity in terms of the impact on nature loss from climate change, change of habitat, and ecosystem change. So already that's the starting point, but we know that, as Mervyn shared, a lot of biodiversity sort of issues, goals, and targets can go a lot beyond what the ESG reporting guide of the Hong Kong Stock Exchange cover. And the positive ones are also different terminologies, right? Nature-based solution, natural capital, and and also thinking about restoration and being nature positive. So it's actually a big range. So I think with that sort of spectrum, I think companies, and oftentimes we have to help navigate. So where do you sit on that spectrum? And being clear on that, because we wouldn't want to have risks of impact washing or greenwashing. So being clear and articulating what is the framework, but at the same time, appreciating the risk that you do have to manage, the compliance baseline, and then, if you do want to be progressive, what that means, and be very specific around that. So these are some of the things that we often have conversations with clients around, and helping them kind of work out how biodiversity risk is going to shape their operations and also their investment companies and in the portfolio or financing.
That's great. And I think it's sparking a lot of questions from the audience. So thank you, everyone, for being so engaged. So I'm going to ask Ellen something, but we'll weave in one of the audience questions as well. So, and it'll be great to hear from you on, I guess, how all these initiatives are affecting what Rabobank and I guess banks in general are doing. And I think one of the questions from the audience is, are there any opportunities that a bank can look at beyond CSR or conservation that we can think about from a pure profit point of view? So I think that's a very important question that I would love for you to tackle.
So let me just get hold of the question. So are there any opportunities that a bank can look at that doesn't relate to CSR or conservation? And how do we look at this from a purely profit point of view? And if there is any such of these opportunities, I think definitely there are. And I mean, back to the first question or the first answer when I gave was when we look at nature is the double materiality. How is the ecosystem affecting us and our clients' operation? And the other way is how do our banks' clients affecting the nature? So you put it in that perspective. We can also try to I would say leverage the opportunity of stop doing something, I won't say bad, but then redoing the existing practices and still generate income in a more sustainable way. I think that will be a perspective. So I can give you a more concrete example. Is recently, I think that was late last year in the last quarter. So Rabobank was very pleased to be engaging in a blended finance solution that helps you boost deforestation-free soil production in Brazil, which is called the Responsible Commodity Facility, which is a highly innovative structure, which is the product of a pre-competitive cooperation between the UK retailers who are seeking to have positive impact upstream in their soil supply chain. So what happened is the UK retailers, they leverage the commercial banks, including Rabobank ourselves, and also we have a dedicated fund called Agri3, which look at enabling sustainable agriculture, forest protection, restoration, and improve rural livelihoods. We provide funding for technical assistance to assist the farmers to start moving towards more sustainable agriculture practices. And with that, what happened is that we also provide low interest loan. So there is a financial incentive for the farmers in the upstream to generate more sustainable and deforestation-free soil supply to the downstream players. What happened is you have two faults basically. On one side, we are tackling the zero deforestation of native vegetation and to maintain the farms forest cover, and on the other side is also we ensure that the farmers, they will have dedicate sufficient income to cover that cost of not growing certain crops over certain areas, and also providing the UK retailers what they want. Probably it could be because of their commitment, but also the consumer taste change, right? I think if you look at it from also blending a bit with how the nature and climate looks at it, when we look at transition risks on the climate side, we look at the consumer behavioral change, and you can also expect similar things happening in the nature biodiversity. If all of us are are looking for more sustainable source of products. If we're looking at the zero deforestation products, certain products or agricultural commodities, that will also means that we probably will be making a choice over, for example, the price and also where do we want to buy, etc. So I think there's definitely an opportunity and correlation, and it's definitely beyond CSR, because at the end of the day, why do we want to do this is also we want to play our role within the planet boundary, because we all know that we cannot just forever exploit in the resources. And if we do that now, yes, perhaps in the next 5-10 years, but then what about in 100 years? So that comes back to it's also helping us whilst we are also helping the nature and the others.
Thanks. I'm trying to weave in questions so that we can answer. I'll just answer one that's come through, which was basically, are any of you part of the TNFD Early Adopters program, and what does that look like? I can answer on behalf of Schroders. So we are signed up since Davos to be the TNFD Early Adopter. And we're also part of the, there was a global canopy, MAS convened a pilot group for TNFD on the palm oil sector that we were working on during the development of the draft report of the TNFD as well. And so I think one thing I would just kind of talk about when it comes to what the stages mean, it's actually, it's very challenging, as many of, as the panelists have said so far, when it comes to looking at some of this information. We need to understand geospatial data. We need to understand how a lot of these risks intersect when it comes to nature. And so we are signed up to early adoption program, recognizing that we are going to have to feel our way through to find the best way of looking at some of this information, how to really report this analysis in a way that is actionable and informative for the many stakeholders involved. And Ellen, if you want to kind of talk about what Rabobank as well on TNFD adoption.
Yeah, I think yes. Thanks, Mervyn. So we are also supporter of the TNFD, and there's also perhaps I can add another layer is there is the Financial Biodiversity Pledge, which we are also part of, and with that, of course, it comes with certain commitments, but also the disclosure requirements, which again back to the complex structure of this topic is there are certain there is scoping that requires each banks or each institution to do. So it might not be one bank's disclosure will not be looking exactly the same as disclosing the same metrics. It will probably depending on what does your loan portfolio look like, or what does your investment portfolio look like.
And I think because of the location of the webinar and we promised to give APAC insights, I would love to hear from both of you on, I guess, how you see things developing in Asia in particular, both from a regulatory perspective as well as the way companies and financial institutions are going to change in the future. So maybe start off with you, Vivien, on your thoughts on this.
Yeah, I think I would highlight by saying that I see a lot of opportunities for actually Asia taking, if I may say, a bit of a lead. And I guess picking up on what I was saying earlier in terms of understanding regulations, reporting and disclosure frameworks, there are a lot of global initiatives, and perhaps in the past 8 to 10 years in relation to climate and broader ESG issues, we hear a lot around the EU kind of Green Deal kind of driving and leading a lot of initiatives. But I'll highlight that out of the EU taxonomy, biodiversity and circular economy kind of counts, but it's one of 6, right? But if you think about the, you can see that for the China kind of taxonomy, actually ecological conservation is a key aspects of it. And also, if you think about the ASEAN taxonomy, I'm not going to go into taxonomy in more detail because I think that there's going to be covered in more detail in the next session of the series. But I'll just say that for the ASEAN taxonomy, for example, actually there are 4 environmental objectives, and other than climate change mitigation, climate change adaptation, actually protection of healthy ecosystem and biodiversity is the 3rd objective, and also resilience and transition to circular economy, which again has a biodiversity nature solution type dimension, kind of more broadly. These are the 2 key environmental objectives out of the 4 that we have for ASEAN taxonomy. So using that as an example, I think we can say that in Asia, we can think about ecological conservation and biodiversity sort of more, very much front and center. And especially now that we see a lot of climate actions initiatives in Asia, we can probably really see how taking into account biodiversity risks and opportunities is going to be part and parcel or front and center of a lot of efforts here. And so I do see that we can accelerate and even take the lead.
Great. And Ellen, on your side?
Yeah, thank you. I totally agree with Vivien's points about the acceleration in APAC. And I think bearing in mind that we are also working in a globalized world where there are a lot of trades happening, which means when we're talking about APAC, if we're consuming certain things that it probably comes from another region, taking the soy example I just mentioned, it was supplied to the UK retailers, and if you think of back into my animal protein or food and agriculture sector focus, a lot of animal protein companies in mainland China, in APAC, in Asia, they're also consuming different agricultural commodities that are not coming from China or even APAC. So there is certainly a huge correlation that's between APAC and the rest of the world. First of all, second of all is which means basically collaboration within certain industry. We also see very strong. Take what I mentioned earlier, and also perhaps the palm oil sector as well in Southeast Asia. I think they're also very strong collaboration of trying to promote biodiversity and restore the biodiversity there. And another, I think, in terms of the policy as well, I think we're also seeing a lot of great push there. For example, China only recently, I think it was January this year, so just last month, they've also issued the Biodiversity Conservation Strategy Action Plan between 2023 to 2030. So what that entails is the efforts to implement the Kunming-Montreal Global Biodiversity Framework there. And there's also a scientific guide to comprehensively improve the level of biodiversity management of the country. So echoing what Vivien was mentioning, in different countries within the region, definitely it is accelerating, and perhaps that we can also see great opportunities to taking the lead.
Great. So maybe let's dig a little bit more into risk management. And so, of course, risk management is a key part of both a bank and an asset manager's work. Now, I'm going to ask you both in terms of how you're approaching biodiversity risk management, but we've had one specific question on this topic from the attendees on how do you handle financial materiality on biodiversity risks, and then where there is a negative impact but not necessarily financial materiality, maybe because there's no policy in place, maybe because it's somehow not going, the negative externality is not going into a company's balance sheet or income statement. How do you consider this sort of risk? So it'd be great to hear both your thoughts on this. Maybe start off with Vivien.
Yeah, sure. I think I will need to leave the financial materiality points to Ellen, but I think this is answering this question is probably kind of a useful way for us to kind of draw what I was saying earlier, because even if you look at the ESG reporting requirement, there is a segment in terms of disclosing on impact on environment and natural resources, and so I think this is where it isn't sort of, and it might be a function of the time horizon, short-term or long-term view, but it is pertinent for both corporations and investors to consider sort of impact on biodiversity or impact on environment beyond financial materiality. So I think hopefully kind of is helpful with that starting point for Ellen to further comment.
Yeah, thanks, Vivien. From the bank perspective, for Rabobank, at least we have made a sustainability policy framework publicly available, which outlines our expectation towards our customers and also business partners with regard to sustainability. And of course, biodiversity is one of the key theme policies that are applicable to our clients and business partner. If we, and back to, I think it's responding to the question from the audience, is if we consider biodiversity impact material to their activity. So it's not necessarily their financial materiality of whether at this point in time they're already affecting their bottom line, but just in general, how is this business affecting the nature, or how is this nature potentially affects the business? For example, if you are working in a water scarcity quite high region, and you also use a lot of water resources, that obviously currently it might not have an impact on you financially, but then definitely from a resources perspective, it might affect you of your business operation in the future. We also, in the biodiversity policy, we explicitly mention about our expectations towards our clients and what we do not finance. So we do have an exclusion list of activities that we do not encourage or we do not want to financing with. So I will not go into details of our biodiversity policy, but this is sort of the framework, or I will say the approach that we use as a risk management approach of, how are we incorporating that? And I think that's also quite similar to, along with a lot of different topics in terms of sustainability, be it climate, be it nature, biodiversity, or other social issues as well.
That's great. And I think that double materiality point is key there, because I think the impacts that a company has on biodiversity and nature is something that some of our clients may care about, regardless of the financial materiality of the investment. So particularly those who are looking at impact or trying to avoid harm, whereas there are going to be some clients who are focusing on this from a pure risk return perspective. And so when it comes to financial materiality of biodiversity in that context, we do have to look at things like the time horizon of the risk and how it applies to different securities, the potential for policy to change that and what the catalysts are. And so depending on the nature of, so that's a bit of a pun, but depending on why we're looking at biodiversity, it would affect how we assess materiality. But okay, so maybe jumping into opportunities, and I think we've had a lot of different questions related to opportunities. So I'm glad, like we should definitely cover this before the end of the session, but we've had questions on the role of public and private partnerships in terms of financing nature. We've had questions on a conservation finance solution. So I think Vivien mentioned nature-based solutions out there. So I think there's a lot of opportunity-based and what's promising financial instruments for investing in natural capital. I'm going to bundle all those three under opportunities. And so Vivien and Ellen, it'll be great to hear which particular areas you think will be a focus on biodiversity as opportunities for financial institutions. And maybe Vivien first.
Yeah, I think I'm trying to, there's a lot there. So if I can try and unpack that, I think certainly as the starting point is being clear in terms of the framework that you have in place. And as I said, kind of setting the target, because there are a lot of opportunities, but it's an evolving space. So there's also some uncertainty in terms of, like say, if you do intend to have a certain investment strategies that is, heavy on biodiversity, you do need to very kind of quickly understand in terms of the data source and the due diligence framework that you need to have in place for that, right? And how that ties in with your reporting requirements, and from a cross-border perspective, what that's going to look like under SFDR, for example. So I think it's key to think about the risks and opportunities within the same context, which is a governance and strategy framework, and what kind of materiality, relevance, the related issues and the targets that you're going to be setting. And that is the strong foundation based on which you can kind of pursue the specific opportunities, which are plenty. But I think it can vary from transaction to transaction. I think I would mention the TNFD guidance, which is called LEAP, which is locate, evaluate, assess, prepare, because that's relevant for both risk assessment and also understanding where there may be opportunities, and also kind of highlight that what may be an opportunity now to be a leader also means that, you're navigating a bit of uncertainty, but at the same time, I think the rest of the market needs to catch up. So there's this idea of partnership and collaboration that I think is very key in opportunities. So I know I kind of digressed a little bit, but I wanted to kind of make sure we cover some of these key aspects of thinking about risk and opportunities. And I'm kind of excited to share in terms of how innovation can come in here in terms of tackling innovation. And so whether it's kind of developing mean, kind of quite innovative approach as some of what you shared, Mervyn, in terms of kind of already having a robust framework that has taken into account regulatory kind of compliance or legal requirements that is shaping how you're doing your due diligence, but you also have kind of some of your more ambitious goals, put it into your plan, right, and articulating that. But I think in some of the markets, we might need to narrow in on something. I'll just highlight that, you know, this is where blended finance comes in. You sort of have to have that clear framework and sort of identifying what impact, positive impact that you're seeking to achieve, that, you know, we can consider then this idea of public-private partnership in order to finance for those specific goals and objectives. And there are actually a lot of opportunities there, because there's going to be a lot of focus on blended finance. I think in the recent COP, firstly, I mentioned that there is this clear message that you look at climate change together with biodiversity, and at the same time at COP28, there's this idea that, you know, climate risks climate is not looked upon just as risk, but also as an investment opportunity. And there's also the other thing that I mentioned is that idea of transforming finance so that you mobilize more capital towards these kind of investment opportunities. And you can think about it for climate as well as biodiversity. And I will cite a recent example, and an exciting transaction that Dentons was involved in is actually a debt for nature swap, advising the Ecuador government, and there was then an element that the facility, the debt swap into a loan facility, and there was a guarantee element, and there's also a strong element of the financing for the purpose of nature conservation. So this is an example of the opportunity and the innovation that we can see in this space.
Great, and Ellen?
Yeah, thanks. I think one of the great opportunities that we can work in within the financial institutions space or the banking space is when if we can elaborate and expand into, you know, sustainable supply chain financing. So here we talk about more sort of financing not only for our clients, but also our clients' suppliers, or even our clients' clients. So in that case, we are not only focusing on the company itself, but also the entire sector or the entire supply chain, where we can tackle all the way from the upstream to the downstream. I think you can blend in a lot of different targets, biodiversity targets, for example, soil health, or even certain standards of your suppliers into this kind of financing structure to make it a little bit more innovative. And also having more influence over, you know, how your clients can influence their suppliers as well. That's one, I think, one of the greatest opportunities that we can work together, not from a banking perspective, and also with the companies. Another example that I can think of, you know, from an opportunity side is also what I mentioned, you know, setting when we are doing the financing, if we are able to set certain metrics, we can definitely do a lot more, and it's more governed as well. So take an example that Rabobank has done in Netherlands is to help to develop a biodiversity monitor together with WWF and the sustainable dairy chain. So the value chain cooperation here, it includes data collection of carbon footprint of individual clients, and there's also a reward system for the clients with lower footprints and improved biodiversity. So what it does is it measures the influence of the dairy farms on biodiversity through a set of KPIs, including soil balance, the share of nature, the landscape management, etc. And it does adhere to what Vivien mentioned, the LEAP, and also the UN, the FAO, the Food and Agriculture Organization's livestock program. So with this focus of the innovation, we're able to monitor the financial products and services as well, and we are able to use the on-farm data as well to understand, you know, how is our clients affecting the nature, and how is the nature also impacting our clients as well.
Thanks, Ellen. I think, well, we've only got a few minutes left, and I don't want to be accused of dodging the hardest questions, but unfortunately, we won't be able to answer all the questions. So one of the, I guess, the most topical one that has come at the very end is, does the ESG backlash in US and Europe have a negative impact on the progress and development of ESG in Asia across different financial sectors? And what do you think about the future development in these districts? So happy to make an opener on this one. So I would say that when it comes to ESG backlash, of course, there is different opinions when it comes comes to sustainability from a financial perspective, as well as ESG as a philosophy. And so we're seeing that probably most common now in the US, where there will be certain parts of the US which are thinking, which object to kind of the concept of ESG as a whole, the idea of how assessing ESG factors should be included in fiduciary duty. And so I think absolutely there's going to be different opinion on kind of what the role of an asset manager or financial institution is when it comes to their role in nature, climate, and sustainability issues. I would say, however, that that particular view, when it comes to the objection to the philosophy of ESG, is really just kind of what we see in parts of the US. What I find in Asia when it comes to considerations, when it comes to adoption of ESG, is more about the financial implications. So I don't really see many in the market here going, oh, I don't believe in the idea of climate change, or I don't believe that nature is important. It's how does this become relevant for my investment or lending in a time horizon, and what should really be my what should really do for my business. And so I think that leads to kind of very careful consideration, right? There are going to be financial opportunities that are completely relevant because we see policies makers across Asia think about climate change as well as nature and implementing. So I think things like the support for green infrastructure, the carbon neutral 2060, that sort of pledges are example of this. Kunming and a kind of COP 15 on biodiversity, another example of the policy direction, right? And so it becomes more of a question, I think, in Asia when it comes to developing an ESG is let's do things that financially make sense as well as make sense for the economy, not exactly just a blind, okay, well, let's just mitigate biodiversity risk regardless of the social and economic implications. So I think that's how, Ellen and Vivien, I'd love to hear your thoughts on this. Not easy question.
Perhaps I'll go first. Just riding on Mervyn's last one, I think is about the relevancy and I think we all need to be pragmatic. When we talk about sustainability or climate or nature, it does mean different things for different companies, different sectors, different subsectors, or even individuals, right? So I think what it really entails is if we talk about sustainability, it could be some sort of very high vision or big vision that the company doesn't feel that they would be able to achieve. But if we talk about energy efficiency or resources efficiency in terms of the nature, I think that's sort of the more pragmatic approach that we can deal with with companies or with clients, because it's about making the right financial investments or the right financial choices here. So I think that different aspects of there are different terms, sustainability, ESG. Sometimes I even ask, what is ESG? It's such a broad concept, and it goes down to a lot of different things. And at the beginning, it was more from a disclosure perspective, right? In terms of the environmental, social, and governance, and we just kind of blended it into sort of making equivalent to sort of the broad topic of sustainability. While sustainability, it can mean a lot of different things on the climate, on nature, biodiversity, and on and on and on. So I think back to the question is, what is the pragmatic and what is the most relevancy for the company itself of making the right financial investments? Is it resources efficiency? Is it because of the strategy that the operation has to move into that direction?
Yeah, I'm conscious of time, so I agree with everything that was said. I think it really is the danger as things develop where it was kind of terms adopted in a broad brush manner, covering a lot of topics and not really a lot of alignment as in terms of from investors and investment managers necessary kind of being on the same page what the product was intended to cover. So in different segments of the market, that has kind of maybe led to some of this backlash. But I think being very concrete, as Ellen outlined, is the key. And as I said earlier as well, disclosure and articulating it kind of clearly. Yeah, thank you. Yeah, I think I'll hand it back to you, Mervyn.
Thank you, everyone. Well, thanks, everyone. I think it's time to end the session. We overran a bit, but I hope everyone found it engaging. Passing it on to Jenny to end the show.
Great. Thank you so much, Mervyn, Ellen, and Vivien, for this really insightful discussions. Just a few key takeaways, I guess, to highlight. There was so much we unpacked during this call. like nature and biodiversity is more complicated than climate. We're all learning this together in terms of assessing the risk and return on opportunity. And there are differences between the asset manager and the bank approach. We need to also give that consideration for legal and policy risk as we navigate kind of like this very quickly evolving landscape. I do think, like, as you mentioned, kind of like from a bank perspective, looking at the double materiality and the impact it's having on your loan book and also on your client's book is key. And then I guess the final point is in terms of legal considerations affecting institutions and how Asia can take the lead. Thank you for being early adopters on TNFD, review the LEAP, and then keep engaging with your clients. And thank you so much. So before we end this event, for the people online, please don't forget to complete the survey to claim your CPT points. And also we have our next third module of the HKGFA Biodiversity Training Series on April the 11th, where we will look at reporting and target setting frameworks, some practical applications and considerations. And if you do have any questions for our panelists, please do send those through to us, the Secretariat, and then we'll be more than happy to pass them along. But once again, thank you very much to the attendees and also again to our speakers. Thank you.